Hi, welcome to Technical Tuesdays. This is Razak, Senior Trading Strategist here at CM Trading. And today we're going to be discussing reward versus risk. But before we start, make sure to like and subscribe so that you can get future content like this. And make sure to share so that your trading community gets the benefit from this free information. So, if you guys know me and you've been here before, you know that I say once or twice that this is probably the most important element of trading. And now I'm saying it again. This is one of the most important elements of trading. Not even a question, okay? Now, most traders who come into the trading realm don't know how to value this. It's not because they're not smart. It's just because they're not experienced. Now, let's call it work money. Money that you go out and you work in any given job, okay? That 9-to-5 job, whatever it is, you're either a store clerk or you're working in the docks or you're working as a driver or you're working in an office. It doesn't really matter. That's work money, okay? That's money that you generate through work. Now, there is trading money that you deposit into your account. And at some point, there's a disconnect between work money and trading money. And the reason is because there's so many opportunities in trading that what ends up happening is that we kind of lose sight of the true worth of money. And I think it even happens with people who have small accounts, not just big accounts. I'm talking about just a $1,000 account or a $250 account. And the reason is because you're able to make so much money in such a short period of time, and you get that sweetness, you get that time where you made $200 on a morning, or you made $50 in a morning, and that's a significant amount of money in the time frame that you made it in. Okay, you made it in, let's say, 3 minutes and 2 minutes or even a minute. Okay, it does happen. And as a result, you don't know how to really respect money in the work money. And because you're earning that type of money maybe out of 2-3 hours for that same $50 to, let's say, $200 that you made in, let's say, 2 to 3 minutes, but in order to make that money, you need to make it either in an hour or 2 hours, you kind of lose sight of it. And this is where we get into not really knowing how to value our reward versus how much risk we're putting on the table. And I think that that's a very important lesson that everybody needs to kind of like reshift again and kind of go back to seeing and valuing money for what it is and respecting it so that you can, kind of balance out the risk versus the reward, or reward versus the risk at any given time. So there's a general rule. And this is a general rule that we all lived by, okay? This is something that was taught to me over my first 2 weeks of trading. And this is the following rule. It's a very important rule, and you need to remember it. At any given time, okay? At any given time, you always want to make at least twice as much as you're willing to lose at any given trade. Now, people don't think in losing in trading. Okay, and that's another mistake that people do, is that they think they're going to win every single trade. Doesn't work like that. You've got to have a certain set of losses in order to make up those wins. Now, I give the example on the webinars, I give it in seminars, that if you're a small store, okay, and you're starting up to open up a grocery store. Now, you're selling milk, you're selling bread, you're selling butter, you're selling other items also. But those are your core items. Those are the items people are coming to you for. How much money are you making on them? You're probably not. You're probably losing on them. You're probably losing on bread, milk, butter, eggs, all the essentials, all the staples as we call them, right? And the reason you're losing it is because there's not much profit margin there. But clients are going to come to your store in order to pick up those things. But guess what happens? They're also buying ice cream, and they're also buying peanut butter, and they're also buying some kind of drink, a soft drink or whatever, and those are your items that you're making money on. So overall, if you aggregate each single item in your store, you'd see that there are some items in your store that you're actually losing money. But if you look at the items that you are making money, they far overshadow the ones that are not making money and losing money, and therefore you're a net profitable business owner. And that's exactly what trading is about. You're always looking to make twice as much as how much you're looking to lose. And in any given time, if you're willing to take the trade, you're willing to lose an X amount. Okay, whatever that X amount is, your profit target should be twice as much. And so if your profit target is $10, well, guess what? You can't lose more than $5 on this trade. And at any given time, it's always got to be 2-to-1 ratio. And it makes sense. Imagine taking such a big risk in order to make such a little amount of money. Doesn't make sense, right? It's just common sense. It makes much more sense. I like the type of trades where I put in $1,000 in an investment and it ultimately made me something like $40,000 in return. Those are the type of investments I like to make. I don't like to make the investment where I'm making 5% or 6%. I like to make those home runs. And yes, do they come less frequently? Absolutely. But when I make it, I cover all my losses and then some. And I think that that's really an important lesson that technical trading is based on. We'll go over a series of money management skills. This will be the first one of risk versus reward, and knowing that you always need to make twice as much how much you're willing to lose. And this is really important. This is one of those colossal items that really is the backbone of any successful trader. Thank you for joining me. We'll see you here next week on Technical Tuesdays.